Discuss now with Jeremy Siegel. Professor Siegel, great to see you as always. Thanks for joining us. I mean, to start things off, I'm actually going to ask about yields. What do you make in the rise in yields over the course of the last 2 or 3 trading sessions and those minutes from the Fed today?
Well, as you know, Will, I've been saying for over a year the Fed had to be far more aggressive than the market had expected with the inflation, I think, never temporary and going to get worse. And I think the minutes in December reflect a lot of concern of those Fed officials. And I think the market is beginning to say, yeah, they are going to get serious. I heard Steve Leisman say that there's 40% chance of 4 rate hikes. I think a couple weeks ago, I told Sarah there was going to be 8 rate hikes, and everyone jumped. I think they're going to do many more than 4 rate hikes coming up, and I think that fear is now what we see in the 10-year bond.
But here's the problem, Professor Siegel. The Nasdaq fell 3.5% today, and the S&P, got hit pretty hard as well. And how many more of those days can the Fed stomach? In other words, did the Fed miss its window? Inflation looks like it may be peaking. And if we continue to see these financial conditions, then things might tighten fast, not really affording them the opportunity to do rate hikes.
Well, let me comment a little bit. I mean, I love Josh, and I heard you interview him a little bit more, saying, we can't repeat 2018, but we're in a very different situation. We have $4 trillion more of reserves in the bank than we did back then. So when they began to run it off, it was beginning to tighten on the bank. We got $4 trillion. And we also have an inflation problem. Back then we had 0 inflation, inflation below the Fed target. So I remember, we are virtually at full employment, in some measures over full employment. And the second important goal of the Fed, and some say the most important goal of the Fed, is controlling prices. So, yeah, there may be a market reaction. I actually think it's a rotation. That's what you're seeing. I still think we could have a good market this year, but certainly those with good cash flows are going to benefit at those that have the discount rates go way out in the future when the Fed is being aggressive. So I don't think it's going to be a bad market. I think it's going to be a rotated market, and I see that's what you've been seeing in the last two or three days.